Hi there, welcome to Kneppy Invests. My mission over the next few months is to create a video on every single ASX company, more than likely going to be small cap companies, that release a positive operating cash flow quarter, and you'll be able to find that in Appendix 4Cs for non-mining companies and cash flow reports or quarterly cash flow reports for mining companies. We are in the middle of July. I'm recording this July the 16th, and we're starting to see these quarterly reports come in a little bit more often, and we'll start to see these reports being released more and more during the next few weeks. In particular, the last few trading days of the month, we'll start to see these reports come in a flood. I do highly recommend any management who are listening or watching this video to release your quarterly report as soon as possible so it doesn't get lost in the flood of reports. And then more importantly, as we go into August, that is reporting season, one of my favorite months of the year, where a lot of ASX companies will release their yearly or half-yearly reports. Before we get into the company that is the focus of this video today, I just want to talk about the three companies I've yet to do a video on, but will be doing a video on in the next few days. Those companies include Spectre, which is a company I own in my own portfolio. I only own a small amount, but I will be adding to that potentially. Reef Casino Trust, that's all about a casino that's based in Cairns. And then Jupiter Energy Limited released their cash flow report this morning on July the 16th. And at one point, the share price was up 80% because they were operational cash flow positive. The focus of today's video is Droneshield. This company develops counter-drone technology and products. They specialize in detection and safe defeat. Since inception in 2014, they've spent $35 million in research and development, and seems like that spending of all that money is now, the benefits of that are coming to fruition right now, and we'll discuss that as we go through this video. They're also winning contracts in electronic warfare and signals intelligence, and that is just interception of signals, i.e. communication. Before they released their Appendix 4C for the June quarter, I was not expecting Droneshield to be operational cash flow positive. I haven't done a lot of research on this company, so when I did see their Appendix 4C, it was a little bit of surprise, and I love those sort of reports that do surprise me on the good side. Droneshield's ticker code is DRO, markup of only $68 million, and in the trailing 12 months, which goes to the end of December 2020, we'll actually have to update those numbers when all these companies release their half-year or full-year results in August. So revenue of $5 million, and they were not operational cash flow positive for that trailing 12 months between January 2020 and December 2020. In fact, they lost $4.7 million of cash during that 12 months. Price of sales, not too high, about 13, and more than likely we'll see that go up quite a bit because based off their receipts for this quarter, the revenue over that 12-month period is going to be absolutely dwarfed during the last 12 months. So see those numbers come down a fair bit, that price of sales come down a fair bit based off the increasing revenues from this company. If you want more information, I highly recommend going to their Appendix 4C that they released on 12th of July. Typically, when I do see an Appendix 4C, I go through all the activities report from a company, and for Droneshield, there's about 26 pages to get through before you get to the Appendix 4C. They also released some sort of presentation or webinar, which was like 30 pages long. So a lot of information came out of this company on the 12th of July. If you do like what you hear in this video, I highly recommend having a look at all that information. Before we get into the June quarter Appendix 4C for Droneshield, just got to go back in time to the previous quarter so we can compare the two quarters. Receipts from customers in the March quarter was only $1.7 million, which matched the product manufacturing and operating costs. So they still had to spend money on staff costs, administration, advertising, and marketing. And because they had a lot of the costs, that meant the company was negative in their operating cash flow by $2.4 million. Still had a lot of cash on hand at the end of the quarter, $13.6 million. So no worries there, no worries about a capital raising, and they still could be operating cash flow negative for a while, a few quarters at least, and because of that cash on hand. So let's get into the June quarter and see how the ramp up in receipts has really taken this company to really good places. And what a quarter for Droneshield. Receipts and customers have increased from that 1.6 million to 7.4 million. That's a significant growth in receipts. I think the question is, can they continue this momentum during the next few quarters? Some of their costs have also increased. In fact, product manufacturing and operating costs have doubled from the previous quarter, from 1.6 to 3.3 million. Research and development about the same. Advertising, marketing about the same. Staff costs have also increased to 1.8 million, and administration has increased to 1.2. So even though they are spending a little bit more money on some of these, in particular product manufacturing and staff costs, because their receipts from customers have simply exploded in the past quarter, that does mean instead of being operational cash flow negative, they are now operational cash flow positive for the one quarter to the tune of $727,000. And because they're not spending any money on financing or, what's the other one, financing investing activities, that means that operational cash flow positive number of $727,000 has gone to the bottom line, and they've increased their cash on hand from 13.6 million to 14.3 million. Onto the receipts history for Droneshield, and the information we have goes all the way back to the July quarter or the June quarter in 2016, where they received about $10,000 in receipts. They have grown that, particularly that growth has really exploded in the last 3 quarters. If we go to the September quarter of 2020, they only received $190,000 in receipts. Then it grew to 2.1 million, fell back a little bit to 1.7 million in the March quarter, and then has exploded in the past quarter to 7.4 million. If this is the sort of growth this company can experience or continue over the next few quarters, a market cap of 68 million and an enterprise value of about 55 million, might be even lower than that, would be very attractive right now. I think that's the big question, is if they can continue this momentum moving forward. I did calculate their growth rate in receipts from the first quarter in June 2016, and they've grown receipts at 39% per quarter, and that growth rate has really been enhanced over the last 3 quarters. Just wanted to see the growth rate over the past 3 years. It's still at 27%, and over the past year, it's actually 68 or 69%. I did have to calculate a few of these numbers again because it just didn't seem real based off what's happened in the last 3 quarters, but those numbers are real. But still very impressive growth rates in their receipts through the whole history, but in particular over the past year. Now let's look at the daily chart for Droneshield going all the way back to the start of 2020. So this includes the COVID-19 financial panic period. I do like to look at that period just to see how low the share price of a company gets. And for Droneshield, the share price went as low as 8.5 cents. Funnily enough, the lowest share price happened 1 month after the market lows, which occurred on March the 23rd. Droneshield's share price low happened towards the end of April. Some good news flow over the next 5 months really helped the share price moving upwards. On May the 21st, Droneshield was chosen by the European Union Police. Share price rose 62% on that day. Not the highest volume, so not a lot of conviction with the market because of the not as high volume. And you can see that with the share price movement over the following 2 months. In fact, the share price went from about 18 cents down to 10 cents again to the levels which we saw during the COVID-19 financial panic. And then on September the 10th, share price rose another 37% because Droneshield received some funding from the US Department of Defense. And ever since then, September of last year, the share price has just been drifting lower and lower, and not a lot of high volume either. So the market is not at all interested in this company. And even when they released their June quarter results and were operational cash flow positive, there was a bit of a muted response from the market, which did surprise me. Share price did rise a little bit, but we haven't seen any significant rise in the share price. So you can become patient with this company right now simply because of this response from the market. So either the market expected these numbers from Droneshield, or the market is completely missing the story in this company. And that is it for this June Quarter Appendix 4C video for Droneshield. If you have any questions or comments about this company or any other company on the ASX or on any other market around the world, I'll gladly try to answer your questions or even just reply to your comments. I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Talk to you later. Bye.